All right, well, let's get started. Welcome, everyone. We're going to talk tonight about keeping deals together. It's near and dear to my heart. Love this session. I go through tonight giving you a couple of different tools that might help you in keeping your deals together, or talking about which forms to use when you need to cancel, and hopefully take away a few tips like we always talk about on Monday nights. So if you have questions or specific issues with your deal that is in progress now, you're welcome to chat in the chat window or to send me a direct message or to Shannon, and she'll be able to get to your questions tonight. So just a quick housekeeping thing. We're going to go till about 6 o'clock, and I've got about 10 slides to go through. And if you have questions, like I said, feel free to chime in. There is not, it's what I like about real estate. There's not really one deal that's ever the same. And I find that very fascinating. And so sometimes talking through some issues or thinking about how to solve a problem collaboratively actually is the best way to handle a situation. So let's go ahead and jump on in, Shannon. And that girl looks pretty haggard. Hopefully you're not feeling like her today. It's some Mondays, I gotta tell you guys, after the weekend, after having this deal want to fall apart and that deal trying to fall apart and this one wanting to file a lawsuit and this one yelling and screaming, you feel like that girl sometimes. So hopefully you don't feel like that at the end of the session, that there's some good ideas that you can take away. But here's what they don't tell you. So most real estate brokerages in our area, they never want to share like how many deals actually fall apart. There are very few companies that even track this number. We do, because it is how Jerry Kay manages the risk. And there's a lot of risk that we assume as real estate brokers. And so we track this number on a regular basis. Ever since 2014, we've tracked it. And what I can tell you is you can see that red line that went up well above 60%. And that was due to COVID. When we had our COVID episode where the government shut us down as real estate brokers and we had a lot of uncertainty about what the future would bring, back in March and April, you see that number went up on the graph there on the right. But for the most part, you'd be surprised. You're like, oh my gosh, do really 20 to 30% of the deals that we write fall apart, or that go under contract that fall apart? And the answer is yes. That's what most real estate brokerages will not share with you, especially if you're a new broker. And a lot of these trainings I do for new brokers that are getting into the business, and they don't like to share that because they want you to have this grandiose idea of real estate. And when you really open up and you look under the hood and you look at the real estate transactions that are done, what you're going to find is that 1 out of 4 is at risk of not going to the close. And there are various amount of reasons why that occurs. But I want you to know that we focus on risk every day, Monday through Sunday, 24 hours, 7 days a week. We are all trying to help you as the office keep your deal together, because when we get paid, or when you guys get paid, we get paid as well. We are a volume-based business model. And so it's important that we manage the risk and we manage it well. And so tonight's session is really giving you some reasons why people back out, and then giving you some strategies on how to keep the deal together. So number one, the reason people back out, most of them that happen, at least in our office, is due to inspection, which sometimes it's for the best. If there are many things that are wrong with the inspection, you could have a failure based on that. Number 2 would be financing. Like I've said in the past sessions a couple weeks ago, we're seeing a rise where the appraisals are not coming in at value. We're seeing a rise of using 22 AD. We're seeing financing becoming people losing their jobs. Or we talked about last week where they do those checks and then they find out, they were furloughed and now the lender cannot do the deal. So those types of things happen quite a bit. And so as a real estate broker, you've done all of this great work up until that point, and all of a sudden you've got a failure, and there's a lot things you can do and some things that are outside of your control. And so number 1 and number 2 are sometimes hard to prevent. It's just the nature of the job that we do. Number 3, Reasons for backing out: resale certificate. If you're buying a condominium or you have a property that's in a homeowner association and you have that contingency in the 22D, there is opportunities for backing out there on resale certificate. Form 17, if you have not signed off and waived your rights on the Form 17, there is a provision that allows you to back out if you are a buyer. Title provisions. Now, a lot of times when I write a title contingency, it's because I don't have an inspection contingency. So sometimes you guys write it with the 22T, other times you do not include the 22T, but just realize that is an opportunity for a buyer to back out if you see a 22T title contingency. There's a lease review on many commercial purchases where there's feasibility or lease review. That is also an opportunity where a buyer could back out. And again, septic or well. So if your property is on a septic system or is on a well, usually you would use a provision or an addendum that would have that ability for a buyer to terminate based on a septic inspection or a well. One of our top producers, he was really good at understanding that, hey, we passed the inspection period, but we also had a septic period or a septic contingency, and the seller did not provide the required documents that were needed in the septic, and we were able to back out of the deal using the septic contingency. There is times when that happens, it becomes challenging because the other side may never have had a termination based on septic or well, but there are provisions that do protect the buyer and allow them to back out if they use those particular contingencies. Most of these things are really reasons for buyers to terminate. There's very few reasons. And one of the quiz questions that the Department of Licensing Auditor asked me, and he asked most of the newer designated brokers when they open their firms, is he asked them, one of the quiz questions it's like the longest auditor that's down there at the DOL. He comes in and he's like a bull in a china shop, and he talks about what are the reasons, and there are very few reasons. He quizzes the designated brokers and he says, what are the reasons for the seller to terminate the deal? And there's very few reasons. There's not very many contingencies for a seller to terminate. But one of the reasons that a seller can terminate is if there was a failure to deposit earnest money timely, or failure to deposit earnest money at all, according to the contract. That is one area where the seller can send over a notice and terminate the contract. There are very few other reasons. If you knew the contract well, like I do, you would also know that the seller has an opportunity to terminate. There's a provision in the 22, if you send over the 22AR or the 22AP, those notices, and the buyer does not respond timely in that, you would have the right to terminate as a seller. But that's about it. There are only a couple instances where a seller can terminate. We don't have a clause in our contract in Washington that is a seller termination clause. Other states may have that. So if you're working with a seller and they're getting squiggly on you, and I know that there are some sellers out there because I've talked to at least 2 in the last week that have said, I've changed my mind, I don't want to sell. We have only the provisions that are, say, it's earnest money, if we pass that, and if we've passed the financing contingencies and the financing's not, they're not giving us what we need on the financing notices, but that's it. We can't just change our mind at the end of the day and decide that we decided not to sell, or we could not buy a house maybe in California, and so therefore we want to use the seller contingency to terminate the deal. There is not a seller contingency in our Washington state contract. But having said home sale contingency, but a buyer, they do have a home sale contingency option, and they can use that to terminate if, for example, they're not able to sell their home and they're purchasing another. So a home sale contingency for a buyer, we do have a reason for backing out, but not for the seller if the seller is not able to purchase another home. Also, another termination point would be a home didn't sell or it was bumped. But then we get down to number 6, which that sometimes is the winning factor for that seller who is maybe having seller remorse at this point in time. We have, they've performed, they deposit their earnest money, they did other financing, the appraisal's been done, everything's past all those points. And the buyer's lender needs more time to complete the sale. The seller may have the right to not extend on the closing date, therefore allowing a seller to terminate in that regard. So we have had instances where sellers are like, I'm refusing to sign the extension. They're not required to sign the extension if the buyer has performed and they're not able to get the file through underwriting. So again, they would probably get their earnest money back in that case. The sellers would not probably get their earnest money because of the way our finance contingency is written. But as you say, the seller wanted to terminate and not sign the extension and the deal passed the closing date. And now we have to deal with the rescission. In that case, the seller can terminate, give the buyer's earnest money back to the buyer, and refuse to sell and to complete the sale. So that has happened as well, where there is reasons for backing out and the extension was not signed around. Signed around meaning signed by both buyer and by the seller. Seller remorse and buyer remorse are real, and we're going to talk about that next. So that is another reason why buyers and sellers want to back out. So knowing how to handle that is probably the best takeaway from tonight's session. Let's go to the next slide. So understanding remorse, this is where a buyer or a seller will question their choice. So they've made a choice to contract, they've signed on the dotted line, you've sent everything around, you're mutual or you're mutually accepted, or as we like to say, signed around, you got the deal. But then after they sign that paperwork, they usually will have remorse. Usually it happens pretty quickly. It's like usually the day after, but they start to question their choices. And the question is it really the right time to buy? Maybe they heard something on the news the night before. They speculate on the market or whether the interest rates might go up or go down. And so they start to have remorse. And a lot of times it's just them questioning the choice that they made to go under contract. Some of the other things I often frequently hear them say, I don't know if I can handle this type of change in my life. I spoke with a gentleman this afternoon and he just got some medical news about having something on his lung where he doesn't know if it's cancerous. And so some of those types of things do impact the real estate that we write up every single day. So not knowing if they can handle, the sale of the home as well as the changes that he might be having to deal with with the doctor, that he has to make some decisions there. And sometimes that's overwhelming for clients. So remorse is real. It happens to buyers and sellers. A lot of times there's a lack of participation by maybe, the additional party. Maybe it's the partner that's also wanting to buy, that's having second thoughts. So the lack of participation is also real, and it does happen. And a lack of communication, really, by the agents or the lenders can also cause remorse. I've added that the more I've had to deal with difficult transactions. I didn't have that last bullet point on this training for many years, and now I've realized that's a real thing too. The lack of your participation in the transaction, or the lack of your communication, or the lenders during the process also helps fester that remorse that pretty much comes out. So I have on the right side of the screen some examples that, some of those red flags that people will say, and then the minus were ones that those are people you need to really watch. If you were to kind of triage or decide, I've got 5 deals that are on the board right now, or I'm working through, they're pending right now in escrow. And a couple of them, if I was to kind of triage, if I was just to have a discussion with that particular buyer or seller, the ones that I would spend more time and build more trust and maybe consult with more or have more communication with would be the ones in the red, where the pluses seem to have their act together. So my parents think it's the right time to buy. I've got my brother if I was to write a deal right now, he would have buyer's remorse because number one, his parents think it's the right time for him to buy. It's not him that's really thinking about that. And then, or my friends just bought a place. So there's some outside pressure or influence that causes the remorse. Or they're separating and they don't want to sell or they don't want to buy. Those are some reasons or examples of some concerns if somebody was to say that to you. maybe we need to back up, and go to the consultation, or we need to have more conversation or involve some additional people to help them make some decisions as far as a lender or an appraiser. Those are some things that are red flags. But as far as the positive, I've always wanted to own my own home. I'm super excited. My wife and I want to put our money into home ownership. Those are some good things that are said or shared with you as a real estate buyer's agent. Or we are wanting, this is one that happened just recently, we are wanting to relocate and buy somewhere else because my job allows me to telecommute. We're seeing a rise in that, where people are wanting to put their home on the market, and because their job is allowing to work remotely or work from home. And so we are seeing a lot of increased sales due to that. And so that's a positive thing, that you're less likely to have remorse when somebody has already made arrangements with their work and they've already spent time talking with their spouse or their other person to really, it's not I, and you know that there's a husband and wife or there's a partner that's involved. You want to make sure that all of the decision makers are involved. Let's go to the next slide, Shannon. So that kind of gives you a few different things that we deal with. Inspection. So just step right into it. We do have a whole train that we do on inspections, but for the purposes of keeping the deal together, the biggest thing to do with your inspection and minimizing the amount of cancellations that you have with inspection is to make sure that you set the right expectations with your buyer before you hire or before your buyer hires their inspector. The inspection report should not prompt request. It really is meant to be a reason for them to decide whether they want to keep the deal together. So uncover maybe defects or latent defects that may not be apparent to the buyer or to you as you're walking through the property. It should match the deal. So say I went into a property and it's listed at 600,000 and I find out that it needs a new furnace and it needs a roof that's shot, that impacts our buying decision. And so that does challenge our original offer. When we wrote the offer at 600,000, we definitely want to consider in our negotiations, negotiating some of the things. And so I have kind of down below some of the things that I had one of our brokers, it was 38 pages. I'm not joking, of items that came up on the inspection report. So what would have been better and what she learned about when we did this was that, the house was older. I mean, there's certain things as you're walking through and showing the property that you're not going to like nickel and dime or make it very difficult for a seller who's priced their home competitively because you didn't do a good job in walking through the property and just kind of setting the right expectations that, hey, your inspector is probably going to point out about the gutter system. Clearly, we can see the gutters are hanging off. The water heater, I mean, we didn't know because this inspection, so this was not the 38 pages worth of stuff. This was, I told the agent, I said, go ahead and talk with your counsel with your client, your buyer, look at all the 38 pages and really get it down to a reasonable, 5 to 7 things that are really important to them. And this is what we ended up deciding to discuss on a webinar. Was the roof being replaced? Was the gutter system that was important to them? The chimney, the water heater in the attic. And then as most inspectors call out, they always call out the carbon monoxide detectors. And they also call out the water heater straps. And those are the two most called out things. And also, I guess you could say, fire alarms. All 3 of those things come up just about in every inspection report. Of things come up, and that we can actually negotiate those things during the 35R. Sorry about that. We had a little blip in our internet. Must be some cold weather out there. When you offer immediately, you want to also let them know that there is opportunity to do pre-inspections. And if there's a lot of pages, really boil it down. And sometimes it might be best either to exit the contract altogether if your buyer is not wanting to stomach all of these repairs that are very costly, that were not readily apparent when you walk through, or to negotiate for price. Sometimes it's easier for a seller to negotiate price than it is to do some of these items. So if you counsel with your clients and you set the expectations before you get out to the inspection, that the inspector typically will find 20, 30 pages worth of items, but we want to really identify those items that make the most sense to either have the seller fix, or sometimes the seller is like an estate, or they're not in town. And maybe it's best to negotiate for a price reduction or a concession than to go ahead and write up all of these things on a 35R. So I can help you with those once, if you have a situation where you're trying to get better. It is a skill set that you acquire over time in keeping your deals together. So speaking of 35Rs, you would send over a 35R. Let's say we wanted to terminate. I get this question asked a lot. Almost like once a week. We have one of the brokers that work for Best Choice is, my client wants to back out. What do I need to send over to the listing firm because they want to back out? It's too many items. They found another home that they like. It's easiest to back out on the inspection because it's just so soon right after the deal. So most of the deals that we have that we manage are because of 35Rs. It's just the nature of the business. You would check the box on the left that the buyer's inspection of the property is disapproved and the earnest money shall be refunded to the buyer. So 35R is all you need to really send over to the listing agent and to the listing firm when you want to terminate and you're representing the buyer. However, because you've already probably deposited your earnest money, you need some sort of authorization to have the escrow company release your earnest money back to your buyer. And so we recommend sending over the 35R and the Form 50. Many of you have been trained improperly and you send over the 35R and the Form 51. Certainly that instructs the parties to have a conversation and release the money and everything gets sorted. However, it's not the proper form. It is proper to use Form 50 because it does not cancel all of the negotiations or the contract that you wrote from the very beginning. The 51, in fact, cancels everything out, and I'll explain more later. But basically, if you're going to terminate on inspection, 35R and Form 50 are the appropriate forms you need to send to the listing agent. And I would not trust that the listing agent is going to turn it into their firm. Always send any notice, including 35R notices, to the firm as well. We have a lot of new brokers that have not been trained properly, and that's the insurance that you know that you've sent over the 35R in the appropriate amount of time. If, for example, let's say the list, and this has happened, the listing agent passes away. Literally, this has happened before. And then we sent over the 35R and we didn't send it to the firm. We go through a long process of trying to uncover what was sent when to be able to keep the deal on track, because the deal is still going to happen whether the listing agent passed away or not. The designated broker took over that file and was able to determine that, yes, indeed, we had sent over the 35R, but our agent failed to deliver it to the firm as well as to the agent. And so in that instance, luckily, we were able to get the wife to hack into the deceased it was the deceased man's email and was able to uncover and provide the timing that would allow us to get out of the deal. So again, watch your timelines, but make sure that you're delivering those notices appropriately. So speaking of notices, there are notices for every buyer contingency. So there's a notice for a finance. Maybe I want to back out on finance. Maybe I want to back out on the title. Maybe I want to back out on, I was not able to deliver my earnest money. Or the seller would actually send that notice. Or I want to back out because of the Form 17. Any of those notices are found in the 90s series. So if you are questioning which notice goes with which contingency, there's a notice, and you can see on the left, this would be the notice that we would use if there was a failure on financing. Now, usually when we send the 90I, it also accompanies the Form 50 because that is the authorization to disperse. There are times when I've sent over the 90I personally, and we find out, the lender that we were working with currently was unable to get financing for my buyer, and then I was able to find another loan. But we want to make sure that we timely give that Form 90. If I would have sent over a 90I and a 51, that means the deal's dead, canceled, we're done. And that 51 becomes really challenging to get the seller to sign off on. If you do the 90I and the 50, you're going to have a better chance of getting the seller to work with you if and see if there's other alternative options if they want to keep it together. If they don't, they want you to go in your separate way and get you your money back, your earnest money. They'll sign off on the Form 50 and then they'll go sell it to somebody else who can get their financing. But there are instances where we may want to keep the deal together, and that does leave the door a little bit open for us by not using the 51, by using the 90I and the 50. The 90I clearly says that the buyer hereby selects to terminate the agreement and demands the return of the earnest money. So again, it's good faith effort that sometimes gets unraveled. And if you're dealing with 51, it becomes a bit hostile, where if you kind of tame it down with the 50, it's a little bit easier to stomach on the listing side. Okay, let's go to the next item. So earnest money. I see a lot of you using improper earnest money, non-refundable clauses, and it has an impact because earnest money is, like I said, the only way really a seller has to terminate the deal, aside from making sure that the financing is through, and all of the things we talked about earlier. But just a reminder, 2 days to collect and deliver. You're responsible for the earnest money as a buyer's agent to make sure that you collect and deliver it. And you don't have a long time to do that. But many of you are writing up earnest money non-refundable clauses, which I highly recommend you use in multiple offer situation. As you look at this proper non-refundable clause, some of you are just writing the earnest money is non-refundable, not proper, not legal, will not actually stand up in court. We have had some incidents where we've had some close calls. Luckily for me, we have been able to overcome most of them. And so we do use, and we encourage all of our brokers, if you want to highlight or copy this, or Rochelle, can you send me the non-refundable clause? I'll be happy to send it to you. Or Jerry K has been able to send this off. We have it in a fairly boilerplate language where we can incorporate it into any contract, 22D, 34. Most of the Windermere and I believe Keller Williams has an earnest money non-refundable deposit clause within their multiple offer addendum. We also have that in our multiple offer addendum as well. But you may need to utilize this language, say, for example, to negotiate an extension. Remember, I told you that a lot of the deals fall apart because the extension is not agreed upon by the parties. And many sellers, again, because of financing and the challenges they may have had in the past, it might be smart to utilize this earnest money non-refundable clause as a way to keep the deal together when the parties are trying to find some middle ground. This allows the earnest money or a portion of the earnest money to be released to the seller immediately. The buyer and seller agree that whatever escrow company, you fill in the X's, is instructed to release it, and it's due for release, and it shall convert to a non-refundable deposit. So it's kind of worded in such a way like the builders do, or they have done in the past. But it's applicable towards the purchase price and immediately be the property of the seller. So that basically means it's the seller, and the seller will most likely use that money to go and buy, furniture for their new house, or they'll go and they'll pay for their mover or their expenses. And so this often happens if this transaction fails to close for any reason other than default by the seller. So again, if the seller defaults, they would have to, in essence, pay that money back, but the non-refundable deposit becomes and remains the property of the seller. So it is very clear to an escrow or a closing agent how to handle this earnest money, transferring it into a non-refundable deposit. It is a strategy, and it is a good idea sometimes if you're maybe losing out on some deals. You may want to consider talking with me or talking with Jerry K about utilizing the conversion of the earnest money into a non-refundable deposit. But it is only in rare occurrences where we're trying to keep the deal together, or we're trying to get a deal and make the seller feel good with their decision to go with our offer over maybe another offer, is when we would use this type of earnest money clause. Next slide, Shannon. So Form 51, I talked about it briefly earlier. This is the Form 51. It cancels everything. So many of you You shouldn't be using it on every single deal. My client wants to back out. If I send or I trigger the Form 51 to go out, then and I've not sent over a reason or a basis for my 51, it can be seen as the buyer breaching, and then the seller would then get the earnest money. So you really need to be cautious about using a Form 51. If you've never used one in the past, you're a newer broker, I want to talk with you before you put this in front of the other side. It requires both brokers to sign it, and it requires both buyer and seller to agree to it. So this is where we get back and forth. Sometimes we had an instance where the lender, it was a bank, and they happened to send over a 35, I think it was a 90I, it was a financing, unable to obtain financing, and they sent over a 51. And this is an instance where, unfortunately, the lender didn't do a very good job in getting the application taken. So it did appear as if the buyer breached. There was some challenges. They were furloughed. I mean, so there was some competing stories that were told as we were dealing with the Form 51. Buyer sent over the 51 with the 90I. Seller refused to sign the 51 and give them their money back. They came back and said, we'll give you a portion of your earnest money back. Fortunately, it was only, I think, $3,000, and the parties agreed to split it. But the rescission agreement, or the negotiation using the rescission agreement, is almost as important as when you go mutual on a contract. Both parties have to agree to the solution or the exit of the contract. The Form 51 cancels everything. That it releases the parties from all of the negotiations, from the 35Rs, from the relationships between their agents, those types of things. They're released from those obligations, and the earnest money is done according to the instructions below. As you notice, there is a blank spot, and we have used that blank spot before to pay for inspections. There was an instance where somebody had her spouse passed away, and the seller basically put together a rescission, and with a long letter that was directed right to the buyer and just said, hey, my spouse passed away. I'm trying to get a hold of my life, and here's what's happening. And it was a long love letter that was sent from the seller to the buyer, along with a 51, where they were basically agreeing, the seller was agreeing to pay for the buyer's appraisal and their inspection and give them their earnest money back. And the buyer, taking that notice seriously with that letter that was sent over on behalf of that widow, was able to sign off on the 51, and they got their money back, and they got even a portion more, I think it was like $5,000 more, to cover the hardship and for the cost of them going and finding another house. Does that happen all the time? No, but that's an instance of when you would use a 51 where the parties just changed their mind, buyer remorse, seller remorse, whatever it would be, and the parties came to a meeting of the minds, or they were in agreement to the legal ramifications that may occur. The seller full right knew by sending over the 51 that the buyer could sue for performance. They had performed, they'd already done the appraisal, they've already done the inspection. They were just waiting for the loan documents to come in. And the seller put enough information together to help that buyer understand the kind of hardship that that person was facing. And the buyer was kind enough and gracious enough to let them out of that deal, or let them out of that obligation. But that would not be something you would just send over without consulting a listing agent or an attorney in creating that 51. So again, I want to hear from you guys more than you have in the past. If you're considering using a 51, there may be a better way of handling the situation or posing it to the other firm so that we can obtain what we're trying to do. Ways to prevent, to kind of wrap up the session tonight, is your role as your client. I put the wedding planner up because I feel like I'm Jennifer Lopez sometimes when she's planning. If you guys saw the movie, I have one of my employees who loves movies, and that's one of the movies she needs to watch, is The Wedding Planner, is how to prevent remorse from getting married. It's kind of the same type of thing. There's a big event that's happening, a closing that's going to happen. And so your role as your client, put yourself in Jennifer Lopez's shoes, if you've seen the movie, and just really reassure, keep them informed, Make them, set better expectations, maybe redo the buyer or seller consultation that you did at the onset, or redo or show them the CMA that you maybe didn't do at the beginning. Send the disclosures, make sure that they have all of the facts before you even offer it up. I mean, why not give them the disclosure before they even write the offer so that they know what they're offering on, or what the seller has said about the property. Offer to pay a home warranty, or help them with the repairs or the cleaning or the professional carpet cleaning out of your commission. Some of those things bode goodwill. Maybe you want to consider using a transaction coordinator that keeps your deal on track. We have some fantastic transaction coordinators. You'll get to meet one of them next Monday night. I have him on slot. And he's also licensed with Best Choice. So you'll get a chance to maybe ask your questions about a transaction coordinator next week. Discuss earnest money. But if the one thing I can give you to take away and kind of wrap this up tonight is, if you do not have a way to prevent or solve, the best thing you can do as a real estate agent is to deal with it immediately. If you think, oh, I'll just pass it on, I'll wait for another couple days, it'll blow over. It never blows over when the clients are wanting to cancel or when they have remorse. You need to deal with it immediately and get us involved, or let us know how we can help you so that you don't have that deal cancel and you become one of those one out of four that cancels without you having a way to solve the problem. So that's all I have tonight, Shannon. I think there was questions or chats. Hopefully you guys were able to solve some problems or answer some questions, but I will open it up if you have a quick question before we wrap up tonight.
It looks like Diane had a couple questions about inspection. Do you want to unmute your line, Diane?
Oh, yeah. I just wanted to see if suggesting to the client to have an inspection
Yes.
with the listing, would that be helpful?
Yes, always. I always suggest having an inspection done on the property. And if you've already passed your inspection timelines, it becomes very hard though to negotiate. But if that's something that you do have to walk through, so it's like right before closing. So if you waived your inspection, you sometimes can get the parties in at the walkthrough. But that's the reason where you want to have a high enough earnest money so you don't have people walk away and send you a rescission saying, hey, I'll give you, seller, the earnest money back, but I'm going to walk away from the deal. You want to have a high enough earnest money before you
So I was thinking of when I'm representing the seller.
Yeah, people that have done their inspections tend to actually stay with the deal. They know what they're dealing with.
Okay.
Sorry, I should have clarified your question.
Yeah.
Yep. So if you're
So that wouldn't be
seller,
a pre-inspection. That would be called just an inspection report. It's not called pre-inspection.
You could suggest that your seller hire an inspector and have them come out. You got to be kind of thinking about your situation though, Diane, because if you have a home that is a fixer-upper, then you have disclosure issues. So if the seller's not willing to include that inspection report with their Form 17, you may not want to let the buyers uncover those defects rather than having the seller do it. If there's nothing to hide, if the seller's like, no, I want to make sure I give peace of mind and have my home inspected so I can deal with the issues or deal with it head on. If you're working with a seller like that, yeah, by all means, call an inspector, a licensed, bonded, and insured inspector, somebody who's reputable in our area, and have them do a full pre-inspection, and then allow that to be part of the disclosure. And sometimes that helps a buyer, decide to move forward, or it allows that buyer to say, okay, I'm willing to use that inspection report. There is an addendum that you would want to use, Diane, to include that there's disclosure that we're not going to be held liable for that type of inspector. So we'll want to make sure we have that addendum as well. And I do cover that in the inspection section, I believe. So I might need to do that again, Shannon. Let's have another inspection class. Okay, anything else? Shannon?
Nope, no other questions. So I think that's it for tonight, guys.
Okay, have a great week. We'll catch you next Monday night. Get ready. We'll have a transaction coordinator that will explain the process. I think you'll find it very helpful to hear that point of view of somebody that's really in the thick of things. Have a great week, you guys, and we'll talk to you soon.